The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, looking good, Billy Ray, feeling good, Lewis. We're going to take a look here at two major markets, folks, two of the biggies. The first one is the biggest, and that's the Treasury bonds. The only one bigger is Treasury notes. We trade the bonds, not so much the notes, but we're looking at these bonds right here. I haven't even looked at the notes, and that's a fallacy on my part, but this is what you're waiting for, folks. We've been waiting for this right here. There's your 78% retracement coming in here at 126.06. The low has been 126.04, trading a few pips up from that. If we start going below 126, that tells us that we're heading down a whole lot lower. If you remember on the far left up here, you see that big ABCD pattern, that butterfly pattern that was up here. That is where the 382, the final 382 was that took us down to this level down in here. We had a really strong rally, and as you can see, a lot of distribution through here with the Federal Reserve giving us all kinds of information. But this is where the game is being played right now at this 78% level. It's also, you'll notice that 382 that we had about 6 or 7 days ago after the Fed on February 2nd. That completes that pattern also. So there's a lot of numbers at that point. What that means is the risk here is very, very small. Now, we want to cover another one. Then I've got some questions that some folks have asked that I want to get to this. By the way, folks, I'm going to be doing the live trading day, the 5 hours. That's going to be on March the 1st. And that'll be a lot of fun. And I'm hoping to have 2 cameo guests that day. I'm pretty sure I'm going to be able to get one of them, but maybe both. Either Tom Hugard or John Jameson or possibly both. But let's take a look at the big daddy rabbit after the bonds. And number 2 that we look at all the time, and we've been waiting for this for, let's see, it's been 2 weeks since we've been waiting for this. We've actually been short. We suggested that you cover the short this morning. We covered it at 1844. The number we were looking for, believe it or not, folks, that 382 number came in at 1839.80. That was the exact number. I double-checked it 3 times of the April gold, 1839. It's not gone anywhere. The high has been 1839. I think we got the high as 1846. Now, if we start going below that, and if we do, then we're looking at something, really sinister, probably breaking 1800 without any trouble at all. What's good about this is the risk here is really small. Your risk is roughly, $5 an ounce from this level. So that's what we're watching here in the gold market. But look at these 382s, how they hit, folks. Bada bing, bada boom. I mean, these are really good. There's one on the upside right here. We're going to be covering those on that March 1st day and show you how we use some of these things. Our guest today will be Norm Winsky. Tomorrow we'll be talking to Jeff Huge. On Friday we'll be talking to Stan Harley. And next week we're going to have Peter Elides on as a guest. Which day is up to Peter. He's going to be telling us when he's going to be available. So those are the 2 big ones to watch today, the gold and also we want to be watching the Treasury bonds. Both of those high risk, high profile commodities and right at the absolute moment of truth. Now, we've got a really neat question here, and I want to try to answer it the best I can. This comes from one of our frequent listeners and a one-time call in occasionally, and that's Jeff and out in New Jersey. I want to bring this chart up. This is a lot of good questions here, and it's all about trading, and I think you'll enjoy the answer that I have. The question that Jeff has is, he said he saw this beautiful 135 pattern right here. Okay, and he said, I'm a little concerned, he said, because I don't know if this Gartley is going to hold or not. Well, my question is to Jeff is, when you see this pattern right here, okay, that's a beautiful 135 pattern. You're in a short-term downtrend, Jeff. You don't know this is going to happen, do you? And you don't even know if this is going to happen. But when this happens, you look at that, you have multiple ABCDs right here. There's drive 1, there's drive 2, there's drive 3, and it's coming in right at the 61% retracement, and there's your second trade. So you sell it at the 135, you cover it in reverse and go long right there, and that's it. You know, Jeff, what you were doing here, my friend, you see all these little things that you've got here? That might be, what do you call, micromanaging, or, you know, maybe you're looking at too much. I don't know, but just do one pattern at a time. If you see this pattern right here, do it. We had the situation in crude oil, the same thing today, and we didn't, you know, I said there's a possibility we could get up here, and it didn't. It started to break. So you don't know what it is. What these are for, what these patterns are for risk control. They do predict within limits, okay? Andrew Lowe has proven that, and they do repeat. He's proven that, but they're not 100%. So what you have to do is decide which one you looked at. You had a perfect setup, and you described both of them, but because you were thinking too much into futures, my guess, you decided to wait, and then you missed both of them. And hey, brother, let me tell you, it happens to me all the time. So you're not going to be infallible doing this because, you know, we're not computer driven here. We're looking at patterns with the naked eye that work most of the time, but they don't work all of the time. And that's what you have to realize. What you should be really happy about is you've done a perfect job of actually picking this out perfectly. You got 135, ABCD, everything's measuring right to there. And there's your big move right here. I don't know what happened after that, but that's what you had it done perfectly. So you should pat yourself on the back and do one other thing. Change your background to a softer color. Don't use black. In fact, I think that's blue. And anyway, something dark. I should use something lighter is what they say in a trade. But if it works for you, you know, that's fine. Now, we got one other question here from another listener about the Japanese yen. This is an interesting one because we featured this in the newsletter this past week. This is the shorter term version here over the last 6 weeks here in the dollar yen. And we'll get this up here and take a look at it. Here it is right here. You can see the big ABCD to the downside right in here. And then you see the first ABCD move right here. And then you have the second ABCD move. That's completing right up here today. So we're having a really nice, this is equivalent to basically a 5-day rally. Okay, now so far this is down quite a bit from the high, correct? So this is a rally in a bear market. So we have to be really, really careful here. So what we want to do on the next slide to look at is what's going to happen to this when we get to another area that might be of interest. So what you want to do is to make sure you go back to December when we were making the high in the yen versus, or the dollar versus the yen, and you'll see what we'd be looking at here. There's your high when it got up to 151, I believe. Yeah, 151. Come all the way down here, and there's your magical number right here. There's your 382. Almost another day or so, we'll be right at that 382, taking out these highs, getting everybody bullish again, maybe for the wrong reason. Hey, we're going to take a break here. 877-927-6648. Let's stay tuned here.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master.
Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN. Educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I want to walk through a couple of positions that we have on just to show you how we set these things up. I've got the gold up here. This is during the time when the Fed was, not the Fed, when the CPI number came out. You notice that we were looking at a 382 there at 1877. It went to 1881, $4 against us, and then it went all the way down here. Now this is the pattern, this A, B, C, D pattern that led you to the number that we were looking at earlier that we were watching. You remember on the daily, we said to watch this in the gold because it was so very, very important. And all you have to do is to go back and check the numbers themselves, and you'll see how it works. But you'll see, where did it go to? It went exactly to the 382 on the daily, and we've been waiting for that ever since this occurred. Remember, we missed this top by $2, folks. That was a that was a life-changing, well, not life-changing, but it was a $10,000 move, and we missed it by $200. But we got a nice piece of it on the down. So we had a little sell in here and a nice one right here, and then we went long right in here. I went in there a little bit early because I certainly don't want to miss it, right? 1844 was where we went in, and the low was 1839.80, and the number we were looking for was 1839.80. And by golly, it hit it so far. I don't know where it's trading right now, but our stop is just a few dollars under that low now, because if it fails, that tells you that it's not very good. And you know, the first indication is it's not going up. And it hit this thing twice. First low of the night was 1841, then we made 1839.80, and we haven't gone up very much. The last time I saw it, it was trading at around 1845, so it really hasn't done very much. So let's remind ourselves that this is what we're watching here when we're looking at these things. They don't always work, but when they do work, they work extremely well, and that's what we're trying to do, is to keep our risks just as simple as possible. I've already covered the bond market. It did exactly what we expected to do, and now we had another one that was looking pretty interesting, and that was the soybean market. If you remember, we were looking for this pattern in soybeans where we had a 3 drive to a top pattern. The measurement came right to the same level. In other words, if you just drew a trend line across there, you see how each one of these hit roughly right on the number, and that's the big A, B, C, D of that swing right there. Came in at 1856. You'll never guess what the high was, folks. 1856. Larry, get gold off your mind. 15.56 was the high of the March soybeans. We're now trading at 15.20. It's down 30 cents, roughly $1,500. And now we're looking at the market that could go down into this area here somewhere. It's still bullish, so we have to watch what the correction is going to be here over the next day or so. So right now you have this as locked in as your stop protected. So you're going to have at least a $500 stop protected for you, and then we'll find out whether it'll be going. Remember, the main thing is they give you the direction of where the risk control is, and that's it. By the way, folks, I've mentioned the book that if you're interested in risk control, it's the foolishness of randomness. I think it was the name of it. Foolishness of non-randomness, or something like that. It's over there on the desk, by Nicholas Taleb, and he's the guy that talked about black swans. He's a hedge fund manager down in Texas. But it's a great book. It's got a lot of examples of going back to these dudes back in the Greek days of Socrates and stuff like that, how they handled risk, and it's really amazing how they thought in their thought process. And he also brings things about Yogi Berra and some things that you and I can understand. And so it's very, very interesting. Like one of his favorite things is Yogi said, "It ain't over till it's over." And anybody that saw that Super Bowl game, you can certainly understand the reasoning behind that. Okay, anyway, that I got to meet Yogi Berra once and have a cocktail with him at the Thunderbird Hotel in 1983 when they had a golf tournament, and I won a reverse drawing, and my first prize was I got to play golf with Mickey Mantle in a foursome. The problem is I don't like golf. The guest that invited me to the country club, in fact, that was the country club where Casino was filmed, where they landed the plane, on the golf course. That's where it was. And my host was a big golf fanatic, and so I told him we were sitting at the table having dinner with Mickey Mantle, and I said, as much as I'd like to hang out with you, I said, I would be a disaster out there. And I said, I just don't want to do that. And he said, boy, he says, if you knew how much I appreciated that, he said, that's really great. And I'll tell you what, the next, that after the game was over, or the golf game was over Saturday night, we had a dinner at the casino, and Mickey Mantle was there, and he came up and actually called me by name and thanked me for, switching off and stuff. And boy, if you think that wasn't something to have Mickey Mantle call me by name, that's one of my highlights of my sporting life. But anyway, that's neither here nor there. Okay, let's move on to a couple others that we want to be watching. You remember we talked about the cattle market. Here again, I'm bringing these patterns to you folks because when they fail, I want to bring those to you too, because they fail all the time. But I tell you, they work more than they fail. That's the whole beauty of what we're doing here. Now here's the cattle. Now look, we have several 3 drives here. We've got drive 1, drive 2. We've got one here. You see, that one worked for a considerable amount, and this one's starting to work. You're already up almost 2 cents in cattle, and that's $800. And when your risk is only $400, you made $800. That's a good deal. So that's really what you're looking at. There's the possibility that we could get a move like this or a move like this, and that would bring you down into here. Now you're talking risking $400 to make several thousand. And that's where the whole process lines up, is you want to line things up so that you can get your profits in and not have to worry about the amount of money that you're risking. What you don't want to do is sell something on Monday and be in it for 10 days and it goes up every single day. Hello, operator. And you think I don't do things like that? I try not to do them anymore, but unfortunately, I don't. After 3 days, I pretty much give it up. But that's really what you're looking at. Now, one other one that was very, very interesting here, because it had several different chances for entering. And I'll bring this up. This was the euro, and this is the largest, folks. This is the one that, Woodward and Bernstein would be doing, because that says follow the money. This is $1 trillion market. There's your 382 from way back here. Remember, we went short at 110.20, and we stayed in it all the way down to here, and we put the trade back on right in here. We were stopped out right there because I didn't see it in time. And, of course, we went back in, and made it all back, of course. And now we're breaking into new low ground, and it looks like we're heading down to that 104 level now in that. So we're going to have Mr. Winsky coming on here in just a little bit. So if you do have any questions, be kind enough to call in or type them into the den there, and we'll try to answer them for you. But Norm will be our guest. I'm hoping I will have a little bit of time. Someone's asked about Taiwan Semiconductor. I'll cover that after we finish with the wizard himself. Stay tuned now for Norm Winsky, folks.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, we're back, and I believe we have Mr. Norman Winsky of Naples, Florida on the line. Norm, are you there?
Yes, sir, Larry. Hello, Larry.
How are you, my friend? Norman, I have some very bad news for you. This will be your last presentation here at TFNN. I got 7 complaints on Friday because you didn't tell us who was going to win the Super Bowl. You'd been right 8 out of 9 times, and since you were not on, they were very unhappy.
Well, they would have been unhappy if I told them, because I was forecasting that the Eagles won based on the January stock market price action.
Ah, well, see, this is a reason why you're going to be our guest continually from now on, my friend.
Yeah.
Anyway, please
if you
tell
want,
us
I'll speak a minute on that topic.
Sure. Yeah, because you did it. You were 8 out of 9 times.
An indicator going back many decades on Wall Street is the January barometer. As January goes, so goes the year, is the old adage, right? So if you have an up January, you should have an up year. If you have a down January, you have a down year. Believe it or not, I ran across a statistical study on that from 1950, and as of a few years ago, it had been accurate 75% of the time. We had an up January. Another indicator is the Super Bowl indicator, which says that the NFL is divided into two conferences. The pattern has been since the beginning of the Super Bowl, if the NFC team wins, that's bullish for the market, and if the AFC team wins, that's bearish. That, up until couple of years ago, had an 80% plus batting average.
Wow.
So
awesome.
That you would think that if the January barometer, which comes before the Super Bowl, you have the answer to that at the end of January. They play the Super Bowl in February. You should be able to forecast who's going to win the Super Bowl. You follow me?
Yes, sir.
Both those indicators should coincide, Also, based on the January being an up month, I forecasted that the Eagles, the NFC team, which would be bullish, would be the winner of the Super Bowl, so that they would both coincide. But that did not happen. But I do plot the Super Bowl scoring during the course of the game and use that as an analog for the year to forecast possible turns and moves during the year for the stock market. Wow. So the first half of the game was we were kind of in a trading range, you might call it, where the Eagles would go up and then Kansas City would match them. So we go back to even, and then the Eagles would score and so forth. So we got to the second half, and then obviously the Chiefs dominated the game. So that says that we're probably going to kind of go nowhere, maybe with a slight upward bias here for the first half of the year. And if the Super Bowl is right, and then we might run into some negative energy in the second half of the year with a big turning point right around the 1st of July. Okay?
That sounds good. So please continue with what you're going to show us today. We're waiting
yes, sir.
for it.
Well, I hopefully have my notes up on the screen now for everybody, and I would recommend you take a screenshot of that. And I was last on your show, I believe, on the 20th, and we had that was a Friday, I believe, and that was a Friday, and we had some stuff coming up that weekend and also the following weekend, and we're going to review that. What we had that weekend was we had a new moon in the sign of Aquarius at perigee. That only occurs, you maybe get one or two incidents of that about every 14 months. So that's kind of a big deal. The moon, perigee is when the moon at its closest. You had a new moon, and when the moon was at its closest point. And so anytime we have a new moon or full moon, we round up the usual suspects, financials, grains, precious metals, and in this case, we're running a special on copper, because the new moon was in the sign of Aquarius, which is copper. All right, so, and then that weekend also we had Uranus in the sign of Taurus, the bull, turning direct. That's the opposite of retrograde. And because it was in Taurus, we'll be looking at cattle and cotton. And because it was Uranus, which is the ruling planet of Aquarius, we also want to look at copper. Then the following weekend, we had Mercury, a Mercury cycle and a Mercury extreme there. And anytime you have Mercury, you want to be looking at the grains. And we also had a U.S. point the weekend of the 27th. And in case you don't have the visuals, the Mercury thing was the weekend of the 27th. AC is after the close, so that's on the weekend. And then we look to do the trade on Monday's opening on a weekend event. And then we had, anytime we have a U.S. to the U.S. chart, we look at U.S. stocks, T-bonds, and U.S. dollar. So here's our first chart. Here's corn for the weekend of the 20th. That means we'll be looking to do something around the opening of the next trading day, which is Monday the 23rd. And as you can see, it wasn't terrific because we did get a bit of a drawdown there, but it did turn around the next. That was a low day, though, of the month. And it did turn around, and you had a chance to make some money. And then we were a day early on the high there in the middle of, on the end of the month with our weekend 27th event there, Mercury event. And if you sold there, you would have made, that was a pretty good one. You made some nice money there. All right, moving ahead, we had the beans with the same window. We had the moon there for the opening of 23rd, and you're near bottoming action there. And then we went up, and we had not a bad day timing-wise on the 30th. But then if you sold on the opening, you really kind of got a bad fill, and you had a kind of a bad drawdown. So I marked that as a miss. That's what red was a miss. Green is good, red is bad, and occasionally we get a sideways, and that's a yellow, and then we do nothing. Here's wheat. If you sold there on the 23rd, you're buying there. I'm sorry, you're buying there on the 23rd. It's kind of the same deal as the corn, and you had a bit of a drawdown that day, but that was the low day of the month, and then you went up, up, up until we got to the morning of the 30th, and then the wheat just went sideways, so you didn't really have a chance to make some money. So on the beans and the wheat, we went 50-50. Here's the cattle going this kind of sideways, not a clear pattern, so we took a pass on the cattle. And here's the cotton, our Uranus in Taurus window was over the weekend of the 20th into the 23rd. And so if you sold there, you had a chance to make a little short-term top there and make it's like about 2 or 3 handles there. Every handle of the cotton is $500, so that would get you something there. You can upgrade at McDonald's, you know. All right, there we got copper going up, up, up. We had 2 points for copper that weekend, kind of a featured market for this for that time with the new moon in Aquarius and Uranus turning direct. That's a rare combination, and we did make a nice short-term top there on the copper. And then we're going to move ahead here to silver on the moon. The moon, good old moon there, and silver, and you made a bit of a short-term top there on the silver. And you had a chance to make some money. Here's gold, not as good as the silver, like a one-day wonder drop there. I think maybe about $30. So that's, if you're trading the big contract, that's about $3,000, I think. And here's your S&P. We had the 2 windows, and as I often mention, I forgot to mention in the beginning, if you're new, the stock market is the big basket of everything, and it tends to respond to all these events.
Okay, we got to pay a few bills. Norman, the music is playing.
Okay.
We'll be back with you in a minute, okay? Stay with us, folks. Norm Winsky coming right back after a short word from our sponsor.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, we're back speaking with Norm Winsky of AstroTrends. Norm, please continue.
Yes, sir. When we went off to commercial land there, I was talking about the S&P. I was saying that the stock market is the big basket of everything. Therefore, it potentially responds to all these events versus the commodities only respond to certain planets and certain signs. So anyway, we had the 2 windows there. So we had 2 events on each weekend. And 2 weekends, 2 events each per weekend. So as you can see there, if you sold the S&P on the morning of the 23rd, you had a little bit of heat, but then you had a chance to make some money if you hung in there, and it dropped over the next couple of days. And then on the weekend of the 27th into Monday's opening, if you had a one-day drop there, it doesn't look like much, but because of the volatility of the S&P, it tends to shrink the scaling there. So I think you picked up maybe about 40 handles there. And, yep, there my mouse took a nap there, but okay. And it came back. All right, here's the T-bonds. You had a drop into the new moon there, and that was a nice short-term low. And then we had another window with the aspect to the U.S. chart on the weekend of the 27th into Monday's opening. And if you bought there, then you had made some nice money. That looks like about 27, 30 up to about a couple handles there on the bonds on that one. Here's the dollar. If you bought on the moon, and by the way, you were mentioning earlier, Larry, talking about the yen, the currencies in general tend to respond to the new moon, full moon, a high percentage of the time. So you might want to pay attention when we have a new moon or full moon. I'll be talking about that. About what's coming up here in just a few minutes. Okay, we made a low on the new moon there for the dollar. You had a little short-term low there and a little pop-up. You had a chance to make some small money. If you sold here on our next point, the U.S. chart, that was a little bit better. You took a little heat, and then you had a big drop 2 days later for a nice a profit, you know. All right, now I'm going to talk about my version of the Bradley model. It's not the Bradley model. I reconstructed the Bradley model, add factors, made it more consistent. I've addressed an issue that everybody who follows the Bradley model, it's their nightmare. And Bradley never talked about inversions. I do that and so forth. And I also put on here some of your top planetary events of the month on the chart here, so you can see what correlates. See what's coming up. So I'm having trouble with my mouse now. Oh boy. Okay, there we go. All right, and so you can see this is for January. I do these in advance. I did this back in December, and then I published this blue line in advance with these planetary points on there. And then at the end of the month, I overlay the S&P. This is the S&P 10-minute bars. The black bars are the S&P 10-minute bars, so you can see how the correlation is, if the train is on the track or not. So it's pretty good, not too bad, right? There we go. And another thing, and then we got the future coming up here. And, I should have done this the other way around. Okay, I'm going to jump ahead a minute. Here's the fractal futures. I talked about this, I think the last time on the show, I showed the silver chart. Here's how my fractal forecast did last year for 2022 for the Dow Jones, and you can see that's pretty good. We're looking for a low there, and we got the low there in October. And sometimes it has a temporary inversion. You were looking for a top here, and you got that top there. Let's see if I can find. I'm not seeing what I was looking for yet. Maybe there, that little top there corresponds to that bottom. Every now and then you get a temporary inversion, and it tells you it's a turning point, but sometimes you get the opposite direction, Anyway, that's pretty good, and I have a class for that if you're interested in learning more about that. I've done all the 2023 fractals now for 28 markets, so we've mapped out the rest of the year for 28 markets. All right, here's what's coming up now astrologically. This afternoon, we have Mercury aphelion. Mercury takes 88 days to go around the sun. The planets go around the sun in elliptical fashion, not in a circle. Therefore, there's a point where they're at the closest to the sun and a point where they are at the farthest from the sun. And aphelion, helios, is Greek for sun. That's where the word comes from. And if it has an A in the front of it, that means afar. So Mercury's at its farthest point to the sun this afternoon. Anytime we have Mercury, we want to be looking at the greens. Greens are, as you mentioned, Larry, I think they're down a little bit today. Might be making a short-term low here into tomorrow. And then if they were to turn around and go up into the weekend, then we're coming up. Well, I don't want to hold on to that thought. I'll get to that in just a second. Then we also have, over the weekend of the 17th, we have the moon's north node to the U.S. chart. And anytime we have that, we have U.S. stocks, T-bonds, U.S. dollar. And then we also have a new moon in the sign of Pisces at perigee, and that'd be near major financial greens, precious metals, and oil. So it could be a big thing going on here with it.
I got a question. Monday the 20th is President's Day. I think the market's closed that day, right?
You are correct, sir. So we're going to bump everything to Tuesday morning, okay?
Okay. All right. That's a question someone was asking. Thank you very much. Go ahead.
Yes,
please
sir.
Continue.
My birthday, I think Larry, is Friday. And
yes,
so
sir.
I called the New York Stock Exchange. I called all the exchanges and said, can we have a day off for my birthday? So they said, how about Monday? I said, okay. Okay.
Well, happy birthday to you, Betty.
Yes, sir. So there we go. So we got the 3-day weekend here. I'm glad you mentioned that, Larry. And we got the new moon in Pisces at perigee, and then we'll be out of the what we call the syzygy cycle there, where the moon and the perigee cycle, new moon and the perigee cycle line up for, and won't happen again probably for another 14 months. So there we go. We got Mercury and the moon right a couple days apart. So something big is brewing possibly in the grains. And this weekend we got the oil, and of course the stock market is responds to this stuff all the time. You got your financials, grains, and precious metals and oil for the weekend. And let's see, that's about it for the forecast. And then we have my bio here, where I've been doing this almost as long as Larry. I've got about 50 years on this now. I started doing the astrology and the stock market back in college days there in the early 70s. And then I made enough money to buy a membership on the good old Chicago Board Options Exchange in 1975. So I've been studying. I love to learn, and so I've been studying about anything. It's rooted in nature, like Elliott Wave, Fibonacci, astrology, music. I have a music background, and so forth, and applying all that stuff, and Gann, applying all that stuff in the markets for many years. And I'll be happy to teach you that. Give me a call, and we'll see what's a good path for you. So
hey, Norm, we have a question for one of our listeners. He doesn't want to know how old you are, but he wants to know what year you were born.
1951. I'll be 72 on Friday.
72 on Friday. Well, that's pretty good.
Yes, sir.
That's good. Hey, listen, thanks for joining us, my friend. We'll have you on again soon. Just give me a heads up so we can put you on the docket. We always like to hear what you have to say, especially when you're coming on near these new moons and perigees and all that stuff, because I know that something happens there. I just don't understand why. Hey, thanks for joining us, Norm. We'll have you on again soon. Okay, buddy?
Okay, thank you very much. Make sure you check out my contact information. Please feel free to contact me. There's my phone number, 239-216-2578, or you can email me at nwinski, NWINSKI, @yahoo.com, or call me on Skype at Nwinsky_1. Thanks a lot for having me on. I hope everybody have a great
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back, folks. I wanted to post a chart here of Taiwan Semiconductor. We had one of our friends over in Hong Kong happened to be involved with that stock. He bought it down near the bottom and then had a really nice run up to the ABCD level. And of course, you can see it stopped right at the top of that ABCD. But what I'd like for you to do now is to show you what really happened next after this pattern unfolded, because it did exactly what we were expecting it to do. And it had bad news today, but as we take a look at this right now, you'll be able to see that we made a perfect Gartley here yesterday, right at the high. And then, of course, you have bad news coming out today, and then the market breaks quite a bit. This is bearish now until we can get above the high of yesterday. That's the way you want to be watching it. By the way, folks, the Treasury bonds have now gone below 126.03, which was the low of the day. They're down at 126. So we're going to just have a stop at 125.30. We're only going to risk 8 points on that, $250 on that. The gold's still doing okay, holding that low at 1839.80, but the bonds we don't believe. And bonds are a huge market, folks. The only one bigger is the Treasury note market. And I will do a special video tonight on both notes and bonds, because the notes are quite a bit bigger, but the problem is they don't have the volatility that you get in the bonds. The bonds have a point value of $31 per per tick, whereas the notes are only 16. And for speculators, that extra amount of money is what makes it run. But we got 6 times the open interest in the Treasury notes as we do in the Treasury bonds. So that's why it's so very important, and why the Federal Reserve uses that as the gauge of where interest rates are going. And so that's what we're paying attention to here today. So live every day in an attitude of gratitude, and may God bless. And by the way, folks, it snowed here in Tucson today. Can you believe it? Didn't snow in Chicago. See you on the flip side tomorrow, folks. May God bless.
Building wealth